Overnight, the S&P 500 and the Nasdaq tumbled as plunging microchip shares in the face of potential escalation of U.S. trade conflicts with China exacerbated the ongoing rotation out of mega-cap tech-related stocks. Meanwhile, the rand is weaker as investors dumped riskier assets globally because of worries over the state of the world economy and geopolitical risks. This comes after U.S. presidential candidate Donald Trump made remarks on Taiwan. Meanwhile, today's local investor sentiment is focusing on the interest rate announcement by the Reserve Bank and a speech in Parliament by President Cyril Ramaphosa laying out priorities for the new coalition government. According to a Reuters poll, there's a prediction that the central bank will leave its main repo rate unchanged, but economists expect it to cut rates by 25 basis points to 8% in September as inflation cools. Looking at the local markets, All-Share Index up 0.3%. Financials as well as the industrials and resources all greened today. And looking at the rand, that's at 18.23 to the dollar, 19.88 to the euro, and 23 rand 62 to the pound. To give us more perspective on the markets, we are joined by Ricardo Smith, who is the Chief Investment Officer at ABSA Investments. Ricardo, thank you so much for your time. I mean, globally, there's so much going on, but as we focus in locally, we've got two events to look out for. One being the Reserve Bank interest rate decision, and a little bit later on, we've got the opening of Parliament address. Take me through how you're reading local market sentiment right now and why we're seeing green on the screen.
Yeah, so, it has been a bit of a positive over the past couple of weeks for markets. The All-Share did reach, all-time high levels in excess of 82,000 points. But there has been a bit of profit taking and some pullbacks here and there. For the day, we are a bit flattish, so depending, when you look at it, you may find us slightly red. I think the subsiding political uncertainty and policy risks have boded well for local markets. We have also seen just, lower load shedding levels and, kind of pointing towards some renewed confidence around sorting out that energy crisis. However, there are still, a couple of outstanding factors, and one of the big ones being the railway as well as the high unemployment numbers.
Let's talk about those outstanding factors. I mean, you talked about load shedding, and it's quite encouraging to see where we are in terms of how many days without load shedding. But the other thing that we're still dealing with is the bottlenecks, or the persistent logistical bottlenecks. And we're seeing that as a theme when it comes to some of the production reports that we got this morning from Kumba Iron Ore, for instance. But take me through, when you look at Kumba Iron Ore and you look at Amplats, what was a common thread there in that production report?
Certainly, for both counters, giving guidance that earnings could be down as much as between 25 and 29 percent, with Kumba Iron Ore, expecting as high as 29% down in earnings. The ports continue to be a challenge. And so, these counters do export their commodities offshore. And then on Kumba Iron's front, also seeing just weaker demand out of China and out of Europe. The property sector in China is still lagging behind quite a bit. And then on the Amplat side, just seeing some pressure on rhodium and palladium prices, but some production levels and just generally on the PGM baskets that we've seen. EV manufacturers missing their targets. So there has been some demand and so some production increase. But overall, earnings are down, and those logistical challenges at Transnet and the port issues continuing to be a challenge for these counters. And those shares are down for the day, with Kumba down close to 30% for the year.
It's quite interesting to see the sentiment around local equities, especially since we've gotten this GNU cabinet, and there's quite a lot of excitement about where things could be and what the plans going ahead would look like. Has that made you shift and look a little bit closer when it comes to SA Inc. Stocks? Are you finding gems somewhere between the large caps and the mid caps? How are you looking at SA Inc.?
So we are still a bit neutral from an SA Inc. perspective. And, if you look at our multi-asset portfolio, the bulk of our risk assets, have been on the offshore side. we did like, government bonds on the local front as the valuations were quite attractive, and we've seen that playing out with compression in yields. On the local, equity front, we are seeing that positive sentiment coming through, as mentioned, likes of load shedding, but there are still quite a lot of structural issues that need to be sorted. And then some specific counters in our portfolios, have done well amidst, this tough macro environment. The likes of Mr. Price, the acquisitions of Yapi Chef and Studio 88 doing well. They did roll out some energy plans on their side as well. And, we are seeing other counters, within our portfolios locally, like the banks. We saw Capitec unwinding some of those impairment reserves and coming out with lower credit loss ratios. But overall, it is still a tough environment locally, and we are a bit cautious on this outlook until some of the structural issues are sorted out.
As we wrap up, are you leaning towards a cut in September for the Reserve Bank, or have you also perhaps maybe moving it out a little bit later towards the year?
I think, we expect the cut to come out a bit later in the year, probably in the fourth quarter. Inflation has been under control for quite some time, but, the currency does continue to be volatile. Uncertainty around US rates and, the rate differential between us and them. And then some drier weather conditions, Brent crude prices, administered costs, and, elevated geopolitical tensions still pose quite a bit of a threat to local inflation.
All right, Ricardo, thank you so much for your time. That is Ricardo Smith, who's the Chief Investment Officer at ABSA Investments. When we come back after the break, we go straight to Cape Town as we build up to the opening of Parliament address.